Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember nothing discussed today is financial advice. It's just for educational purposes only, and it's my view of the markets. Now that's out of the way, let's jump into the Bitcoin chart, shall we? So it's been another, well, obviously looking at the daily chart, it looks like a very tight range, but if you're a low time frame trader, there's been some great trades to be added within this, as well as watching the Moon Boys and the over bullish bulls get wrecked several times. So as usual, what we're going to do, we'll talk through this week's setups, and then I will move on to discuss what I'm looking for next, because I think the next week or so is going to be very key for a medium to long term direction. Okay, so let's zoom in, shall we? So let's we'll zoom into the 15-minute chart, and then we can quite clearly see this range. Obviously, this is that small range that what we're looking at. I mean, you don't need to be a genius to look and call that sideways action, but obviously if you look at it through squinted eyes or maybe some jam jar goggles, you'll see all kinds of shapes within here, and obviously we know what happens to pattern traders. So let's start off. We'll go back to last Thursday, actually, when we recorded our video. Okay, so we're going to start off on this because obviously we did have a decent move on Thursday. And I'm coming into the group on the morning saying we're still range bound, remaining within value. When I came in to do that update, we would have been Thursday, so it would have been roughly around here. Okay, and what I'm referring to by the range is this range here that we are clearly in. If we get to value area high / algo pocket, then I'm looking for shorts. Now this was up in this region here. Now no trigger was made then because we didn't actually get any decent reaction. And then I've put above that, I'll be looking for the 31k region, potential swing failure pattern of those highs. Okay, so those highs I'm referring to are the overall highs. That's what we're looking for. So either a swing failure pattern of the overall highs or into that 31k region, which is the range high. So if we zoom out, obviously this is just that overall range that we've been in. Okay, the higher time frame range. So this is what I'm referring to. So what we've done, we've come up, another fake breakout. Once again, trap traders all up at the highs. Now, admittedly, I didn't catch this move here. What I was looking for is I was looking for a retest. Okay, so what we did is we moved down, then we came back up into the range highs again. Again, it's a key level, rejection, rejection, and then obviously if we scroll back, we can see previous rejections. And what we've done is we've come back up into that golden pocket region, and what we were looking for at the time is we had massive local bearish divergences going on. Okay, and that's what I was watching at the time. So we had local bearish divergence, which means, and this is what CVD shows us, that we had people aggressively market buying up here, trying to get that breakout trade. Once again, breakout traders on the wrong side as usual. Okay, but we must have had limit orders absorbing all this selling. Okay, and then what happened after that? Well, then all of a sudden we get some news come out. Okay, the SEC says spot ETF filings are inadequate. Okay, so it was rejected on its first attempt. Okay, and then we got a nice big sell-off. Okay, so this is what I mean by news events bring volatility, and I'm not going to deny that. Okay, and I'll say that to the guys, and I teach people within the group this. All news events do is accelerate what's going to happen. Okay, so that's all it'll do. So up here, before the news came out, way before the news came out, we know we had local bearish divergences. Okay, this is way before the news came out. Okay, it's at 10:38 versus 1:30. Okay, so we had bearish divergences forming. Okay, so we had that forming. Then we see it's in a key resistance zone, which is pretty obvious. And then we get the sell-off. Okay, all these guys that were trying to long the breakout then were forced out of their trade, and then we got the sell-off down to 29.5k. And I've said this in the group time and time again, 29.5 remains the key region for me with a lot of confluence, and that's lining up with these lows here. Okay, now for me that's effectively what I would class as the bull's last stand. Start getting below that and maintaining a bearish structure, and I'll be looking for lower prices. Okay, and again just trading this larger range. Okay, so in the end we got this, came down, nice wick again. Now the sellers turn up, so when momentum traders turn up, that's time to change direction. So what happens? People see this, people start chasing this, selling, shorting all the way down, and then all of a sudden at support, gets a nice bounce out of it. Now, admittedly, I didn't catch this trade. I got this trade, which in the end ended up being a really nice trade. You know, there's roughly 4 hours there. Okay, and there was no take profits in between because it just moved straight down. Okay, so that's a really nice 4-hour trade. Dead straightforward. Okay, they moved back up. I didn't catch that, but I know some of the members in the group did because obviously it's the region that we were looking at. I wasn't at my desk at the time that it happened. Absolutely fine, but in the end, we came down to the support region and then we got the bounce back in the end, back up to the range highs. Okay, so there was a potential 8-hour trade there. Okay, which some of the guys in the group caught, which I'm dead proud of them at the moment because the guys over the past month have been absolutely smashing the trades. Okay, would it have been a full 8.5 hour? No, because they're not idiots that had taken profits at key levels. Okay, but in the end, damn good trade. Okay, let your winners run, cut your losers early. Okay, so that's Thursday. Moving on then to Tuesday. So Tuesday was a great one because this is one that we were actually looking at in real time because Tuesday is our live stream day and this week was a chat and chill live stream where I map out for the guys my high time frame areas of interest and my low time frame areas of interest, and I was specifically focusing on a swing trade on this stream, not this one, but this is one that we were looking at in real time. Okay, now again, this is one that I didn't catch because I was too busy preparing for the live stream, but I know the guys in the group caught it, so we talked about it in real time, and what we had is Tuesday, obviously, was July 4th, Independence Day for the US, so the US markets were closed. Okay, now we had the initial sweep of Friday's high, leading into a sell-off yesterday evening, and then we've got the potential for the 80-20 to play out today, because we're already back within yesterday's value. So therefore here, when I'm doing the update, we're already in Monday's value area. Okay, in the end, we came up, couldn't get out of value, came back down, then we got a spike up to take the liquidity. Now in this instance, you can see this here. So a lot of people, a lot of traders will trade the 80-20. Okay, personally, I'm not a fan of it. I prefer to get an entry outside of this and then use the 80-20 to add confluence to where my take profit is going to be. Okay, but a lot of traders will trade this. So a lot of traders will have been short in this value area high again and again and again. Okay, then start to see the pull away. Didn't take out these lows, so therefore, structure not changed. And then in the end, all we did is we just came up and we run these stops. Okay, run these stops, grab this liquidity, and again, this is what I was talking about in real time on the stream. Ran these stops into the golden pocket, very straightforward, into this previous consolidation here, and then we had the sell-off down to previous day point of control. In the end, it did actually go lower. Okay, but you know, any of the guys in the group that were watching this, and a lot of the guys were taking the trade, 6-hour trade there, nice and easy. Okay, so if you're risking $100, then you made $600. Okay, this is trading. This is what you should be doing. You shouldn't be longing up here, hoping for this breakout, trying to catch a breakout trade and hoping that it's just going to go straight to 100k or whatever made up number everyone's got. You can trade real technicals and make decent money, but you've got to understand what you're doing. Okay, so that was Tuesday. Wednesday. Now Wednesday, this is a great example. Now this is how an example of how trading's not perfect. Okay. This is how trading's not perfect. So on that Tuesday live stream, I told the guys that I'm interested in this region down here for longs. Okay? The reason why I was interested in this region for longs is because of Sunday's low. This is Sunday's low here, this green line here. Sunday's low into the golden pocket. Okay? Got a cluster of volume down here. Okay? So I was very interested in price coming down yesterday into this region, taking out these lows, and then looking for a reaction and taking a nice long trigger on the back of that. Okay, and timing lined up great as well because the timing that we were down here were around New York Open. Okay, now anyone that trades alongside me in the group knows that I'm a very big fan of New York Open, or more specifically session times. Okay, so that's what we're looking for, and in the end we didn't actually get down even to the golden pocket, never mind not taking out these lows. Okay, now on Bybit, the USDT pair did come down to the golden pocket, didn't take the lows, but came down to the golden pocket. Okay, so for this, we've got front run. So this is where you've then got to question yourself, well, I'm not going to chase this because it's front run it, and there's a good chance that it can come back down. Okay, catch anyone longing the front run, offside, come back down, and then hit into your golden pocket or into this zone, then make the move up. Okay, so there's a good chance that could have happened, but in the end, we didn't get that. And this is what I mean. You've got to trade what the market gives you and not what you want. Okay, this is what I wanted. This would have been my ideal setup down here. But in the end, we didn't get that. What we ended up having is this front run, a bounce up, changing low time frame market structure. Again, this was on the 5-minute chart when this happened. Then we came back down. And then when we came back down into this pocket again, we actually had really heavy selling into this pocket. And we ended up getting a lot of excess into these lows. So people trying to sell and trying to push price lower, again, probably looking for this zone down here like me, but price didn't break through. So in the end, what's the market trying to do? They're trying to sell. Are they doing a good job? No, because they're not getting it any lower. So therefore, for me, that was a long trigger. And in the end, we got the long, and now we're back up to where we are now. Okay? And if you didn't catch that long, absolutely fine. Then you could have waited for a higher time frame structure break, and you could have got back in on the next golden pocket. Again, you'd have been in a very similar trade in the end. Okay? But again, timing would have been a factor because this has happened at 1:15 UTC, so that'd have been 2:15 my time, and I'm not waking up for that kind of trade. Okay, and we can see it's continuing up right now. Okay, so where can this go? Well, that leads on to what we're going to look at next. Before we do that, I want to poke fun, as I always do, at influencers. So once again, put another triangle. Okay, and some of you guys might think I do this because I'm a bully and I like to pick on people. But the reality is you've got to realize why these people are doing these things. Okay, so this is one of the new kids on the block. He's literally a 15-year-old kid. And he's under the wing of Moon Carl and Crypto and Da Vinci and all the influencers out there. Now, again, I reiterate that influencers don't make money from trading. Influencers make money by you clicking on their referral links. Okay? Or whatever scam project they come up with, whatever altcoin they create, and they're just using you as exit liquidity. Okay? But people like to follow these because they make trading look simple. Okay? If triangle breaks upside long, if triangle breaks downside short, well, in the end, this kid got destroyed 2 times in a sideways range. And you've just seen our own trade setups from the group. Okay? How a genuine trader trades. Okay? How the professionals do it. This is how kids do it. This is how influencers do it. Because they're not making money from trading. It makes no difference if they get stopped out or liquidated time and time again, because it's not real money. Okay? It's not real money. All they want to do is make it look really simple for you. So you join up, you do these same trades, and then you get stopped out. They don't care if you win or lose. They just care that you're trading on their account. That's all they care about. So in the end, along the initial breakout, what happened? It came back down. And again, this is what they'll tell you. So, look for a daily close outside. Look for a daily close for confirmation. Okay, well, you got your daily close outside, then what happened? Well, you still got stopped out. Okay, then, oh, well, if it breaks to the downside, then we'll place the short trigger. All right, okay, well, it broke to the downside, placed the short trigger, and, oh, now, look, we're breaking out to the upside, so now you stopped out with this. So what you're going to do now, just flip it around again and do another long here because you're breaking out again. You know, you can see this. So within this, you know, let's say they've done it on a couple of these wicks. They've had more losses than we've had wins. Okay? So we don't trade like this. Anyone that teaches you to trade like this is an absolute fool. How can you trade a triangle that looks like this when you've got wick here, wick here, wick here, wick here, close outside, then you've got wick, 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 wick? You can't. So instead of doing something stupid like that, it's a range. You short the highs, you long the lows. Rinse and repeat. Okay? And if you're not that technical and you just want to trade a range, well, it's quite simple. You just trade the outer extremities of the range. Okay? You'd have had more than enough setups within there to make your account balance fairly happy. Okay? Right. Obviously, if you guys want to learn to trade like we do and get access to my daily plans and what I'm looking at in real time, head over to our website, spitfiretraders.com. Get access to our free Discord via this link here, if you like, or you can click here. And obviously, if you do want to learn how to trade, then come check out our course. You know, within our course, we've got over 80 hours of individual lessons on how to trade, covering everything from absolute basics to range trading, fibs, volume analysis, patterns and how to counter trade these patterns. Again, that's a big key thing, but obviously we've got harmonics in there as well. We've got footprint charts, order flow. Obviously, we can actually see inside the candle and see what's going on in real time. How to manage your trade, including entries, because obviously the execution is the hard part, and a lot of these courses that are out there, they'll teach you some of these things. But learning TA, I posted this on Twitter the other day, and I'm going to go on a side rant here. Posted this on Twitter. So anyone can learn TA. Learning TA is just like learning anything. It's like learning a second language. It's like learning a math skill. It's just learning something, and then you can implement it. And I've known over the years, I've known many people that are great at analysing the market, and they can nail more moves than I can. But the thing is, they can't execute a trade. Okay? They can't execute the trade, and that's the key thing. These modules within trade management are the key to success, because it's how to execute the trade. You've seen what you want to see on the chart. You've seen it come into your area of interest. You've been given the setup signal, but you don't take the trade. So this is key. This is key. The execution. Okay? Not everyone can do this. This is where most people fall down. Okay? We've got Elliott Wave. We've got psychology. Again, touches upon the trade management, but it's a lot about, you know, if you want to trade full time, what it takes with your head, with your finances, and then how to control yourself within these trades. We've got various altcoin strategies, how I trade altcoins for swing trades and day trades. Accumulation distribution, again, very important right now based on where we are. And then individual trading strategies that we've started doing. Okay. Next week, we're going to be starting our Forex modules as well. So I'll teach the guys how to use these methods to trade Forex pairs. Okay. So moving on. What am I looking at next? Well, you won't be surprised to hear that there's no real change following on from my last videos, okay? So this is what I'm looking for. So currently we're range bound, okay? So the first thing to be aware of, and the first thing that I really am aware of, is if we continue this up move here, get above this range high, then ultimately I'll be looking for these highs to be taken. Okay? If these highs are taken in a clear swing failure pattern, then I'll be looking to fade that move. Okay? But I want to see that swing failure pattern. I don't just want it to get above these highs and then just blindly short. Okay? I want to see a clear swing failure pattern. I want to see breakout traders getting really horny up here, trying to long, but price isn't going anywhere. Then start to change structure on a lower term time frame, then I'll be looking for a short trigger. Okay? If it gets above these highs, effectively, the next ones I will be watching are these coming up into this zone here. Okay? So for me, anywhere within this zone is fair game. If we see the entry criteria. Okay? If we don't see any weakness up here, then I'm not going to be looking for shorts, and I'll just let my longs continue. Okay? But this is what I'm looking for. Either come up here, change market structure, then I'll be looking for shorts. Come up here, no change in market structure, then I will let it ride up. And once again, like I've said, I'll be looking for effectively this range here to come into play. And if we're coming into that range, then we've got to see where the volume is. Where does the volume lie? Okay, we can see that the volume lies here. Okay, so if we do get into this range, reclaim it, then we've got to ask, do we get back into value? Yes or no? If we do, we've got the point of control just above us, around 39k-ish. Okay, so the 38 to 40k region for me is key. That's key. That's major resistance in my eyes. Start to get above that, then all right, fair enough. Then we're looking for these range highs. Okay? Then people really will start flipping crazy bullish and the FOMO will commence. Okay? For me, this is key. So this is something, you know, if it starts getting up here and you see everyone on Twitter and on YouTube going crazy and, you know, talking about the made up number targets again, then, you know, it's time to take some profits and then potentially look for some shorts. Okay? So this is what will happen up in this region. Everyone will get uber bullish. Okay? So, what happens if it does start to break down? Well, if it does start to break down, let's say we get these highs, we start to come down. first and foremost, do we lose these local range lows? Okay, we lose these local range lows, and I'm going to be looking back down towards the EQ. Okay, now again, this is thin. This is thin. So if we don't find any support there, then likelihood is it comes back down towards range lows. Okay, at range lows, you've then got to ask yourself, do you get a reaction? Do you get a market structure change to the upside? Yes, great, look for longs. No? Okay, let it roll over. If it rolls over, then again, we're back down to this range. Do we then get acceptance back into this range? Yes or no? Okay, if we do, then we're just back to trading this range. Okay, and within this range, everyone will flip mega bearish, absolutely fine. But at the end of the day, as a range trader, I don't really care because we're just range bound. Okay, we've got 1 range, we've got 2 range, we've got 3 range. Okay, it's not until above this, then you're in blue sky. Okay, until then, we're just trading ranges. And eventually, the ranges do break. But I won't be trading the breakout, as we've seen time and time again. Okay, just like trading this breakout. Doesn't work. Right. Before we go, big thanks to BingX for sponsoring today's stream. Obviously, if you don't know who BingX are, then they are a crypto exchange where you can not only trade crypto, but you can also trade FX, commodities, and indices. Now, I use these guys for trading FX, commodities, and indices. And some stocks as well, because I can use crypto as collateral, so I can deposit USDT and trade the FX pairs and everything else. And it's an on-KY exchange for those who can't use Bybit or other KYC exchanges because you might not live in the correct country. So yeah, obviously, if you do want to check out BingX, links down in the description. If you use our code, then you get a share of bonuses. For the first few people that sign up, you will get up to a $50 free trade as well. So yeah, thanks to BingX for sponsoring today's video. Right, until next time, gang, smash that like button. Don't forget to subscribe, and I'll catch you next time. Bye-bye.